All right. Good evening, everyone. Good afternoon, actually. Happy Monday to you guys. Welcome once again to another live stream. Here we are today, Monday. Hope you guys had a great weekend. I know I had a wonderful weekend. It was beautiful here in Philadelphia. The weather was beautiful. So hopefully, where you guys are, you had nice weather as well. I know that we have some issues going on with corona cases spiking all over again. But besides that, hope you guys had a great weekend and was able to hit the ground running today. You know how it is on Mondays. It's like one of the most important days of the week. All right, Mr. Wong, how was your weekend,
Hello,
sir?
hello. The
How was
weekend
your
was
weekend?
the weekend was fantastic, Garsham. And this is the most exciting time right now to be a Bitcoin miner. I know
It,
you have a pet agenda today, so let's get started.
absolutely. Let's get started. So the first article that I want to talk about today, as you guys can see on the screen, so this there's so here's what happened. There's a bunch of people that constantly monitor what's going on with Bitcoin. How a Bitcoin's being moved around, and so because you can check all of that stuff on the blockchain. That's the beautiful thing about Bitcoin and it being decentralized, right? You can check
Hmm.
all that stuff on the blockchain. So apparently, over a year right now, 61% of the wallets that contain Bitcoin hasn't moved in over a year, hasn't been
Hmm.
touched, nothing. They're just sitting there. So this happened, the last time this happened, where over 60% of the Bitcoin didn't move, was right before the last bull run in 2016, going into 2017. And
Hmm.
the premise behind it is that they call us hodlers, people that hold on to their Bitcoin, is that everyone right now is expecting the next bull run. So no one is getting rid of their Bitcoin. They're not moving it, they're not selling it, they're not trading it. Everyone is just sitting on their Bitcoin because we all know that the next bull run is just around the corner. So what they're saying in this article is that this indicator, when you have this many Bitcoin wallets that haven't moved their Bitcoin in over a year, this tells us that we are pretty much in the groove and ready to go for the next bull run. What are your thoughts on that, Mr. Wong?
So actually, in addition to that, I think last week we were talking about um, you have some of these fund managers that are buying up to 150% of all the Bitcoins that are being mined. So if you combine that with the buying pressure and there are no supply on, in the market because 61% of the people are not touching their Bitcoins and, meaning that they're holding on to it, they're not selling it. That simple supply and demand, is going to help drive the Bitcoin price going upward. And
Absolutely,
and
absolutely.
and
And these, and we always say history repeats itself, right? Some people say history doesn't repeat, but it rhymes. But nonetheless, there's so many things that's taking place right now in the Bitcoin space that
mhm.
happen right before the last big Bitcoin bull run when it hit $20,000 in December of 2017. And this is just another one of them, right? There are others for sure, but this one they're looking at and say, hey, the last time this happened, and here it is happening again. Because we all know, and we talk about it. I know you, Mr. Wong, talk about it. Our vice chairman, Mr. Jingao, talk about it is that you can literally look at Bitcoin and trace the history of its performance and everything that happens. You can look back, 2 years, 3 years, even 5 years, and see the exact same thing happening. And so here we are right now, right after the halving. We all know that, yes, we're going to go through a pain period. We're in that pain period right now.
Mhm.
Bitcoin is kind of like bouncing between 9,000, 10,000, right? That's called
Yep.
consolidation, right? Everything that's happening with Bitcoin right now, it is consolidating, right? And whenever that happens, then you're gonna have a breakout. So nothing is 100% sure. We know that, right? Because when Bitcoin breaks out, it could break down just like it could break up. But the probability of it breaking up is tremendously higher than it breaking down, right? So when you look at everything that's happening right now, including the consolidation, including all the hodling, including all the acquisition, everything that's happening right now in the Bitcoin space is telling us, guys, get ready for this next run. And I strongly believe that this next bull run, when it hits the next high, I absolutely believe that it's going to surpass the last high of 20,000. So I truly believe that. I'm not sure about you guys, but I'm committed to that prediction. I truly believe that next bull run, this one that's coming, that we're all getting prepared for, is going to blow past $20,000. Am I right, Mr. Wrong, or am I right?
You know, you're always right, because I actually kind of want to hear what our audience have to say about it, right? So comment below from Facebook or from our YouTube channel. Let us know what
Yes,
you think.
absolutely. We want to know what you guys are thinking about it. Do you guys think that we are pretty much right before the next bull run? Do you guys see the consolidation that's happening? And do you believe that definitely we are just on the cusp of making us next bull run? And also, I would like to know if you guys believe that this next bull run coming up in the next couple of months or so, will we surpass the last high of 20,000 in 2017? Will
Mm-hmm.
we surpass that high this year, or will it be
Mm-hmm.
next year? Right? I believe that we're going to see somewhere in the next high, which is going to pass 20,000. I think we're going to see that come towards the end of the year, probably November, December. So that's my time frame. But yes, we would like to know, what do you guys think? Do you guys think we're going to hit a new high this year, or do you think it's going to wait until next year? I'm very interested to see what are you guys' thoughts on that?
I guess we'll review their comments later.
Yeah.
We'll let everybody know, but please feel free to comment below.
Let us know your thoughts.
We want to hear from you guys.
This is an interactive thing, right? Definitely want to hear you guys' input for sure. The next thing I want to talk about. So you all know how much we admire Robert Kiyosaki. And I know the last time we talked about Robert Kiyosaki, Jason, you had mentioned how when you first read the book Rich Dad Poor Dad, how much that changed your life. And now your son Alex is reading it, right? And now your son is reading that book, right? And
Yeah.
I'm so proud to hear that your son is reading that book, and many others. So I have a lot of respect for Robert Kiyosaki, and the guy has made himself into a billionaire, a literally self-made billionaire, right? So when someone like that, have some things to say, I normally slow down and listen to what he's saying and take it at heed. But so he's saying right now that the Federal Reserve is in trouble. And he believes that, after this next run right here, that we may very well see the Federal Reserve coming to an end. Now, many people don't believe that. But what he's saying is this, right? The Federal Reserve has blown up their balance sheet. Right now, I think it's like $6-7 trillion. And we already predicted that before this next crisis is over, we could see the Fed balance sheet of around $10 trillion, which is astounding, right?
Mm-hmm.
So we think about it, because here's what happened. When the Fed talks about buying up all these corporate bonds, or a lot of the stimulus that they're doing, what's happening is the Fed is the one that's buying up these bonds, and they're putting them on the Fed's balance sheet, right? So now they own them. But what happened is a lot of these companies, what he called their zombie companies, meaning that they're over indebted. A lot of them are insolvent, right? And so now the Fed owns them. So when these companies, for lack of a better term, go bankrupt, that's also going to be on the Fed balance sheet, right? So
of course,
in his mind, he's saying, hey, the Fed own all these zombie companies because they're propping them up, because propping up these companies also inflate the stock market, which is what everyone pays attention to. And they want to give us the illusion that the economy is getting better or the economy is good. So they need our stock market to go up. So how are they going to do that? They're going to prop up these companies, but these companies are zombie companies. They're broke. They're over indebted, right? And he's saying, hey, the Fed, you own these companies. They're zombie companies. They will go bankrupt, and that's going to be on your balance sheet, and you are going to be in trouble. What do you think, Mr. Watt? She's shaking
You
your
know,
head. Yeah.
it,
Are
it,
you
it,
are you afraid of the Fed?
it's kind of it's kind of funny actually. Alexander was during lunch today. He probably watched it from YouTube or read it from his iPad. He's saying, "Hey, Dad, did you know that you can go out there and you can get free money from the government and for each kid you can get another $500." Well, so I said, "Yeah, I know about that." He said, "Yeah, so did we get any?" Well, we don't qualify for that, number one. Number two, I told him, I said, "We didn't get any." And I said to him that, even if I got it, did you know that you'll be the one, and you and your siblings will be the one paying the bills for the rest of your life? As soon as he heard that, he said, "Oh, then don't
Then
get
don't
it
get it.
because I don't take it." I said it's not about us taking or not. it's about the federal government or Federal Reserve. They already authorized that, right? That money is already spent, and you
Yeah.
guys are paying for the bill. With your future tax dollars, we're going to be paying some of it too, but most of it is going to go to them. It's going to trickle down to them,
It's
right?
funny, and the thing is, whether you take it or not, they're still going to pay for it.
But the bill is there. This is like going out to eat with your friends, right? And if Gershom, you're not a drinker, but all your friends drinks, you're still going to pay for that.
And then when the bill comes, I got to pay. Yes.
You're getting part of the bill.
Absolutely.
Right. So it's the Fed in its last leg. I don't know, but I can tell you with the direction and the strategies that they're employing, right? It is not good for our next generations, or for us. It has to be paid back one way or another, and it's coming out of your tax, dollar is coming out of your pocket and my pocket. That's just the bottom line. This is not free money. It has to be paid back one way or another.
Yeah, a lot of people look at it as free money, and I try to tell them, there's no such thing as a free lunch. Somebody has to pay this money back, and it's going to be us. It's going to be our kids, grandkids, right? Taxes are going to go up. We're going to see inflation, all that stuff. But and let me see if my timeline served me correct. So one of the reasons so Robert Kiyosaki did not say this in the article. This is just my thinking, just following the timeline, because I'm old enough. I wasn't like paying attention like that to the financial markets, but I'm old enough to remember the savings and loans crisis, right? And the savings and loans crisis, the banks came in to bail out the savings and loans crisis. I remember when long-term capital management blew up, right? When a hedge fund blew up because they were heavily invested in Russian bonds. Their default on their debt because the economy collapsed in the Cold War, and because Russian default on their debt, long-term capital management blew up, and Japan was also heavily invested in long-term capital management. Their economy blew up, and then Wall Street came in to bail out long-term capital management, right? Fast forward, we have the subprime crisis, and the government came in to bail out Wall Street. So if you follow the chronology, you have first the banks bail out the savings and loans, banking system, right? But then the next crisis was too big for the banks, so Wall Street had to step in to bail that out. Then the next crisis, which was the subprime crisis, was too big for Wall Street, so the Fed had to come in to bail out Wall Street. So the next crisis, which may well be this one right here that's playing out, who's going to bail out the Fed, right? Because all of these crises, they keep getting bigger and bigger to where the last entity that provided the bailout couldn't handle it. So if the Fed provided a bailout for Wall Street when the subprime crisis happened, now if the Fed gets in trouble, where do they go, right? Because, and a lot of analysts are talking about this, like the next crisis, and like I said, this could be it, but the next crisis is going to be a sovereign crisis, meaning that we're going to start seeing countries going bankrupt, right? And I know that we are the biggest economy in the world, but we could have a situation where the debt is right at the Fed's doorstep. And the only thing I can think of that they could run to get a bailout if that happened is the IMF, right? But I was thinking about that. If the Fed get in trouble, right? If the Feds were to be in trouble, where would we turn to? And the only other option I see is if we turn to the IMF. It's a thought. It's like I'm thinking out loud. I haven't clearly processed it yet, but over the weekend I was just thinking about that. What are your thoughts about Mr. Wong?
Well, the IMF is made out of majority of the shares from probably from the US, right? So I hope we don't get to that point because if we as a country are in trouble, I can't imagine for the rest of the world. So, you know, that the magnitude would be so huge. Now, I was just reading an article about from the WHO, right, World Health Organization. They're saying that the pandemic is actually speeding up as opposed to slowing down.
Wow.
And the worst has yet to come. And so people, please do your part. All right. Do your part and to help curb, the infection rate. We can all do our part very simply, by following the protocol.
Yeah, and it's funny. I was just talking to James. James, if you don't mind, kind of like expand, give us your thoughts on this. Before we went live, I was talking to James, and he was saying in his county, where he lives, they were seeing a spike in cases there, and I think he was saying that. Correct me if I'm wrong, James, but your county may have had like one of the highest numbers in terms of cases for the past couple of weeks in California. You want to kind of like fill us in on that, James?
Yeah, I mean, it's hot, the weather's nice, and, with all the protests and everything been going on, people's minds have been, taken away from the coronavirus and the pandemic, and a lot of people were stockpiling goods, and that whole urgency to be super hyper prepared for, the coming storm kind of softened, right? And definitely myself included. My mom sent me an article the other day, and it was showing that each county and town has put their number of cases out, so anybody can look at it. And I was just shocked to see my own town was like right there at the top of the list, and it just was sobering. Like, damn, I need to stay focused on, not lose focus here. We're not through this yet, and it was a sobering reminder.
Yeah, for sure.
And one of the things that we're talking about, so we all know that when the fall and winter comes around, then we stand a very good chance of the virus intensifying, right, because of cold weather. And so if we go through the summer and don't get a really good handle in terms of, dealing with this virus, in the next few months, we're going to be right back into the fall and then right into winter. So yes, if we don't really make every effort to, curb this thing to the downside and then go into the fall and the winter with these cases spiking like this, we could be in for a long winter. So, to what you were saying, Jason, definitely do everything we can to minimize it. And, when it comes down to it, a lot of times you can only do what you can do, right? But if each person put in the maximum effort to protect themselves and those around them, right? If each person, do the things like, I know a lot of people don't like to wear the mask. I mean, I get the point where they're coming from, but hey, better safe than sorry, right? So if each person, when you're around people, you go in the stores or whatever, wear the mask, practice, washing your hands and things like that. Just do what you can, and hopefully we can get through this. A lot of people think that it's a hoax and it's a scam. I mean, look, it is what it is. Everyone have their own thoughts. But nonetheless, I'm going to try to do my part as best I can to hopefully we can minimize this thing so we can get back to some kind of normalcy.
Yeah, absolutely. I totally agree. We got it. We all have to do our part in order for this, for us to come out of this as a country.
We do, because if we don't, then it's only going to get worse, right? Because if we don't, then we go into the winter time, and cases are going to spike all over the place. I don't want to deal with another lockdown of the economy. Who wants to deal with that? I mean, like, seriously, nobody wants to deal with that, right? Not only the effect it's going to have on you as an individual, but the effect it's going to have on your community, your neighbors, your family members who have to be out of work, and all that. So if you can just do something to minimize the impact, then why wouldn't you? A lot of people just trying to, buck the system, if you will. Sometimes you got to pick your battles, and now may not be the right time to buck the system. I'm just saying, right?
Yeah. We already know that several states that are seeing a sharp spike in new cases and new infections, and that causes these states to redraft their reopening plans, right? And we certainly don't, we don't want to. Pennsylvania has been doing really well, so we certainly don't want to get back to where we were 3 months ago, right? So that would be bad.
Yeah, that'd be terrible. That'd be devastating. Absolutely. All right, keep it moving. So, as you guys know, we're doing things a little bit different when we bring these videos and interviews to you guys. So we're doing it in the middle of the live stream, and that way it gives us time to kind of like discuss and have a conversation around the topic of the interview or whatnot. So this video I'm going to play for you guys next. It's it's a very short video. It's like 5 minutes long. And this lady, we heard her a couple weeks ago in an interview. They were asking her about Bitcoin, but she didn't really give an in-depth analysis as to what brought her to her decision into buying Bitcoin in February of this year. I think it was February of this year she bought Bitcoin. Anyway, but so this particular interview she was in, it happened over the weekend. I listened to it.
Listening to TI.
Ron, if you want to get really wonky and into the depths of it, you can see you can do ratios like what would the money supply have to be to get to a debt to money supply ratio that was back where it was before we had these big debt bubbles. And you say, okay, that's the money supply by the end of this period. How long do I think it's going to take to get there? What
You're listening to TIP.
So hey, how's everyone doing out there? More tapered
scenario. And all of that, very, very detailed, intricate research that she did to come to the conclusion. And the reason why I think it's important, a lot of times, we talk to people and we hear things out there in the ether and all these negative things about Bitcoin. I know that we all, we're in and we get it, but sometimes these negative thoughts about Bitcoin can kind of creep in. But when you hear someone like this laying out the groundwork as to why it's important to have Bitcoin, as to why Bitcoin will work, then it kind of helps us solidify our belief in what we're doing, right? So I thought that this would be a good interview for you guys to hear. Once again, it's on the 5 minutes, and then once it's over, we can kind of get back to the conversation. And hopefully, I want you guys to, think about it and maybe drop in a comment. What was the one thing that you took from this little 5-minute dissertation that she did about Bitcoin? Okay, so let's get right into it.
Putting this in your portfolio, but I saw that you have a position in Bitcoin. I'm kind of curious what your thoughts are on it.
I added Bitcoin in April of this year. So it was around just under 7,000 at the time. And the reason I did that is, so I started covering Bitcoin on my website in 2017, because that's when we had that giant run up in price. And so of course I got email after email asking me about it. So years before that, I had been aware of Bitcoin. Like I actually knew someone that she was like mining Bitcoin on her computer. Like that's how long ago. Like I was like, that's neat. So I knew the idea of it, but I just kind of considered it almost like a micro cap, like cool thing that's happening. But of course, when 2017 came around, we got this pretty sizable move up. So I got tons of emails. So I did a pretty big long form article on it. And I tried to say, okay, let's value it in different ways. So I said, okay, at the time, we can value it as a medium of exchange, or we can value it as a store of value. And we can kind of just play with different scenarios. I took the full like Bitcoin market cap and I compared it to, say, the money supply market cap of different countries. And I said, okay, how many people does that country have? What is their GDP? How does that compare to how much economic activity is happening in Bitcoin? My calculation at the time was that Bitcoin had a very large market cap compared to how much economic activity that was probably happening in it. So it's kind of priced as a growth stock. You could call it. It was priced as though it's going to explode in that scenario. The other way to look at it is a store of value. So if the entire world put 1% of their portfolio in Bitcoin, what would that be? What would the size of Bitcoin have to be in order to have it so that everyone can have 1%? And then you say, okay, what if you want to do it with 3% or 5% or 0.5%? Using that model, that showed that Bitcoin was actually still pretty cheap in many terms, if Bitcoin ever took off. And my concern at the time was that there was also kind of the rise of altcoins at the time. So we had Bitcoin dominance fall from nearly 100% down to, briefly went under 50% for a while. And so my concern was, although Bitcoin is scarce as a protocol, anyone can technically create a cryptocurrency because it's known how to do it now ever since they figured it out. So it was kind of more like a question about the network effect. So anyone can create, for example, a social media website. The coding is not that hard, but it's almost impossible to create the next Facebook, right? Because basically your code is worthless until you have enough adoption, until you have enough security, until you have this trust in the protocol. So back then I concluded by saying, I don't really want to have a position. I think it's very speculative. I don't think it's a bubble. Like, I'm not criticizing it, but I don't see a ton of value at the moment. And I'm concerned about whether or not Bitcoin's going to retain market share. And that was also the period when we were having like Bitcoin Cash fork out of it. So I just kind of put that on the back burner and said, okay, that's, I think it's not something I want to touch at the moment, but I'll keep monitoring it. And over the next 2.5 years, so we had Bitcoin. Back then, when I did that article, Bitcoin was about 7,000. It was something like 6,800. And then, of course, for the rest of the year, it soared up to 20,000. Then it fell. Then it came back up to like 12,000. Then at the beginning of this year, it fell down to like 4,000 again. But in April of this year, when it started to recover from that low and got up to about 6,800 again, it kind of did this big round trip to the same price that I analyzed it 2.5 years ago. And it behaved a lot like gold did during the sell-off, where when there was a liquidity crunch, Bitcoin sold off, but then it started to recover. I was also aware of the halving event that was happening and kind of the just different things that are happening timing-wise there. And then Bitcoin dominance. So we've had kind of a fall off in all of these other cryptocurrencies, and Bitcoin's retained up to about 2/3 of the total market cap of the space. So my view of its network effect strengthened, and it had another 2.5 years of trial and error, basically. So we have like a full decade of history now. We have a pretty strong network effect. It didn't get diluted by those forks that happened. It didn't really get diluted by those altcoins. So the combination of the protocol being very efficient and seeing more and more evidence of Bitcoin-specific network effect made me want to have a position as a scarce asset.
Lynn, I can't tell.
All right. So, like I said, it was a very short chat. The interview itself was over an hour long. And by the way, if you guys want me to, I'll drop the link in our Telegram chat later. But it's a very good interview. You guys should really listen to it. That little section right there. So that was towards the end of the interview. And the interviewers, there are two interviewers, and they just ask her, her thoughts on Bitcoin. But the entire interview, like I said, was like an hour long, where they go into macroeconomics, microeconomics, global economics, the monetary system. I mean, everything that's going on in our economy and on a global scale, they went into it. But I just a little snippet right there, I wanted to share with you guys. But if you guys want to, I'll drop the link in our Telegram group. You guys can listen to it later on. You get a chance to. Really good interview. You guys should listen to it. But like I was saying, I wanted you guys to maybe, drop in the chat or the comment, what's the one thing you guys took away from that little 5-minute clip right there? The one thing I took away from it was the biggest confirmation for her is the network effect of Bitcoin. So what does that mean? That means us. That means the miners. And what she's saying is the network effect, the security of Bitcoin is so strong, and it has withstood so many onslaught from, the forks. Because I don't know if you guys remember this, a couple of years ago, Bitcoin Cash was forked from Bitcoin. It's like they tried to copy Bitcoin, right? And then you have Bitcoin SV. Litecoin was forked from Bitcoin. And what she's saying is Bitcoin withstood all of that. You know, all these altcoins coming out, right? All this price drop, everything that happens to Bitcoin, what it does, it got stronger. And Max Kaiser is always saying this. He said, look, Bitcoin is anti-fragile. So what does anti-fragile mean? Anti-fragile means that the more you attack something, the stronger it gets. And he's been saying this over the years, like all these different things that's been going on, not just in the cryptocurrency and Bitcoin space, but overall in the economy, has strengthened Bitcoin. And that's exactly what she's saying. You know, over the years, all the research that she have done, right, and looking at it, what she's realizing that Bitcoin is getting stronger and stronger and stronger. And the biggest part of Bitcoin's strength is the network effect. And that's what miners do. And so for me, when I hear her talking about that, it gives me goosebumps because that's what I do, right? That's what you guys do. We are the Bitcoin miners. We are a part of that network effect. We are the ones that's giving Bitcoin its strength. And so that's my takeaway from it. I would love to hear what you guys takeaway was from that little 5-minute rant. Mr. Wong, what say you, sir?
Hey, so great video. Thank you for sharing that. The two things that I really like about, you know, that 5-minute clip that you showed us was that one, she took the time to analyze Bitcoins as a payment system and also as a store of values, right? And I think that's how a lot of people look at it. In the beginning, I think the idea is, hey, Bitcoin was going to be like a payment system. Make it easy for people to kind of transact, right? Borderless. You don't have to pay a ton of fees or things like that, whatnot, right? And over time, as we start having these, you know, economic downturns and, you know, followed by pandemic and all that stuff, people start looking at this thing as maybe a store of values. So I like how she, you know, was able to go through both, you know, different scenarios, and then come up with a decision to invest in Bitcoins on behalf of her firm. That's very exciting. Another thing is, you know, the network effect that you mentioned and she mentioned about it, and I totally agree with you. This is exactly what we do. If you remember, Gershom, I always say that, you know, our mission is to go out there and get everybody to be involved in the mining side of things, because then we know we have mass adoptions. I don't care what kind of package they buy. If everybody just comes in and buy one of our Bronx package, they are part of Bitcoin network. They are part of the network that help keep this, you know, this network running. And throughout these years, we have thousands and thousands of all these altcoins, and many of them fail, right? And that only makes Bitcoin stronger, because then people know what is the real deal. And it kind of gravitates people towards Bitcoins even more and make Bitcoins even stronger. I can't wait to actually watch the entire interview. So it's exciting.
Please. Yeah, watch the entire interview. It's solid. It's a solid interview. That lady, she's super smart. I mean, so many people goes to her for her research and all the things that she does in the space. She's super popular on Twitter. She's like on all the podcasts. Everybody wants to interview her. So that interview will give you a really good insight as to what's going on the macro and also on the micro. It's a really good interview. So I highly suggest. As a matter of fact, I'm going to drop it in the Telegram group regardless. You guys want to listen to it, fine. Don't want to listen to it, fine. But when we're done here, I'm going to drop it in the Telegram group so you guys have access to it. But yeah, that's my takeaway. Once again, I would love to hear what you guys are thinking. Hey, James, is anyone dropping in the comments section about what they took away from the 5-minute interview?
Yeah, Luis Giovanni Colon, thank you for your comment, man. He said the fact that it stood the test of time and it shows big investors are now taking it seriously. That was one thing that stood out to me, the fact that you have 10 years now. Did 10 years really just go by that fast? You know, there's 10 years of proving grounds for Bitcoin. And like you said, it's come under fire from all the bazillion altcoins that have tried to take it over and be the next big Bitcoin. Through all the haters, it is somehow persevered. It's amazing.
It's awesome, man. That's great. Yeah, that's a thing. It's super anti-fragile. The more anyone tries to attack it, the stronger it gets. So, yeah, and the network effect, like we're talking about, like me and Jason talking about, the fact that the security of the network effect, we are part of that. I mean, guys, do you understand how important this is? These are the things that, for those of you who don't have grandkids yet, or maybe have young kids or young grandkids, these are the conversations that you're going to be having with your grandkids around the fireplace. You're going to be telling them that you were part of the Bitcoin network that helped strengthen and carry this new technology that's pretty much gives so many people freedom, right? That they can actually save their financial future. You're going to have those conversations. You're going to be proud of that, talking to your kids and grandkids about you are a Bitcoin miner, right? You guys should be proud of what you're doing. I'm telling you. So yeah, that's the thing I take away from it, is the fact that, as a Bitcoin miner, we play an intricate part in this overall network effect to make it secure.
Yeah,
all right,
sure.
moving right along. The next thing we'll talk about, Mr. Wong, fake gold. This is a very interesting article.
Yeah.
So in China, there's a company that I guess it's like an investment company that makes jewelry, and they had some investors invested in the company, and they were using gold as the collateral, right? So they had like over $2 billion invested in the company, and gold was the collateral. Well, come to find out, when they audited the company, that the gold, it was fake gold. It wasn't real gold. So here it is, over $2 billion invested in this company, thinking that their $2 billion is backed by $2 billion plus gold, but it was no gold. The gold was fake. So the thing about it, and Jason brought this up, and we talked about it earlier, the fact that you cannot fake Bitcoin. And that's another advantage that Bitcoin have over gold. I know that it seems to be like this battle. I don't see it as a battle, but I guess it kind of is, between Bitcoin and gold, right? Which one is going to be the better store of value for the future? And so the reason why I find this article to be fascinating is that, look, you cannot fake Bitcoin. You can fake gold, right? And this article proves it, but you cannot fake Bitcoin, right? And I thought I was interested. What say you, Mr. Wong?
So let me just give you a little bit more in-depth background about this particular company. It's listed in NASDAQ, by the way, and is one of the biggest, prior to this pandemic, one of the biggest jewelry retailer in China. And over the years, they were trying to expand. So they have been buying these golds, right, from both institutional and just regular retailers. So what they wanted to do is they wanted to get a loan with the gold reserve that they claimed they had. So they went to several different fund managers and hedge funds, and they got a loan. And these hedge fund managers are no fool. So they actually went out and they hire people to inspect these golds to make sure that it is real. And they also went out to get themselves an insurance policy in case these golds were ever stolen or lost. So this is how elaborate this scheme, was. This company actually, colluded with these, I guess, auditing company that inspected the golds, right, to produce some fake reports, and and these hedge fund companies, they bought it, and they loan out the money, which is, like you said, $2 billion worth. Now, when this pandemic hit and it's hitting, China's economy pretty hard, these bondholders, you can say, right? They wanted to basically get their money back. So they decided that they wanted to liquidate the gold, liquidate the collateral. When they tried to do that, they found out the hard way that these golds were fake. Right? It was copper bars that were coated with 24 karat gold. Obviously, they can't get their money back. Correct. That's exactly what it was. And the insurance company denied their claims, saying that, hey, you guys never had any real gold for us to insure with, so therefore we're denying your claims. These golds were not stolen, right? Which is one of the perils that it would cover under the insurance policy. They were fake golds to begin with, right? So there's nothing to insure. So they got turned down. And can you imagine, if you're thinking that, so if you're one of the investors that bought into their stocks, which is listed on NASDAQ, by the way, right? A very reputable exchange, just to find out that, wow, this particular company went through these elaborate, scheme and colluded with, the auditing company to come up with these fake reports, you're left with.
They must have paid them off.
Of course.
Yeah, that they paid off the auditors and all of that for them to sign off on the fact that it was real gold when it wasn't.
So you and I were talking. I mean, for them to pull off this kind of scheme, which is not easy, but they managed to do it. They managed because, you can buy it off people. You can buy it off companies, right? To produce these, fake reports. But you know what you cannot buy off? You won't have the resources to buy off millions and millions of Bitcoin miners who help verify these transactions. So when I saw this article, it just, it made me believe in Bitcoins even more so than before, because it is almost impossible for people to fake.
Yeah,
that's how secure the network is.
Well, you're right, because you can't fake open source. You can't fake the information on the blockchain.
That's correct.
Right? That can be fake. Actually, that I was talking to Mr. Jing Gao this morning.
Yeah.
About something. So a lot of Wall Street companies, Wall Street firms are getting into the Bitcoin space. And look, we all love that because they have the deep pockets. Even Grayscale, they have Wall Street connections and whatnot. And it's a good thing because, like I said, they have the deep pockets. But I think Wall Street comes with a double-edged sword. So what I mean by that is this. Wall Street will bring the money. They have the deep pockets. But Wall Street also is going to bring their shenanigans. And one of the things that they're very good at is creating derivatives.
Yes.
And so that's my concern with Wall Street getting heavily involved with Bitcoin now. And the thing is this, it's inevitable. They are going to get involved with Bitcoin.
Yeah.
But I'm concerned about what kind of exotic, and they have these fancy names for these things, but what kind of exotic product are they going to come up with when they start to create these derivatives from Bitcoin? And that's my concern. As a Bitcoin miner, and that's another reason why I'm glad that we are Bitcoin miners, because when you're mining Bitcoin, you know that the Bitcoin that you're getting is actually Bitcoin, right? Or let's say,
yeah.
I mean, like, really, it is Bitcoin. It's not a derivative.
Correct.
Right? And Wall Street, those guys are very good at creating derivatives where you think you have something, but you don't have it.
Right.
And, for people who are going to be buying their Bitcoins and whatnot, once Wall Street start to create these exotic derivatives products, you may think you have Bitcoin one day and find out that you don't. I'm not saying that's going to happen, but just look at how Wall Street operate and, the things that they've done over the years. And I know that that's one of their biggest moneymaker is creating these derivatives products. I don't see them coming into Bitcoin and not trying to do the same thing. So I was just thinking about that. That's a concern I have with Wall Street coming in is, they will start to create some derivatives product. And how is that going to affect Bitcoin?
Well, yeah, Gershom, I totally agree because, the way they make money on Wall Street is through, fees, right? If our audience have not watched this movie called The Big Short, I encourage you all to go back and watch it. It's an eye opener.
That's a must watch.
Yeah, how the Wall Street basically single-handedly created these financial derivative products and caused the collapse of our financial system in 2008.
Yeah.
What they have managed to do is basically put a bunch of, for the lack of a better word, shitty mortgage papers, those B's and C's paper, those loans that requires no documentations, no income verifications, all the worst paper that you can basically get together from the market, and they combine them together, and then they get these rating firms to say, oh yeah, somehow because you rearrange them, now the risk profile is different. Now we'll give you an A rating. They're all triple
A.
Triple A.
Not
yeah.
A. Triple.
So that they can sell it to the unsuspected consumers out there because we are not sophisticated like those people, right? And oftentimes we're the last one to find out about it, so that we get stuck with the hot potato. And that's how a lot of people, especially retirees, gets burned. You know, and such an eye-opener movie. So you guys have to go watch it. My word of advice, and this is, why I'm getting involved with the Bitcoin mining, is I like to just keep it simple, right? I'm a believer in Bitcoins. I'm a believer in decentralizations, and I don't like these, fancy derivative products. Frankly, I don't understand them, right? And
no one does. Not even look. I remember when this whole thing was falling apart, and they had the Fed chair. I forgot who was interviewing him, and not even the Fed chair understood the products that was coming out of Wall Street. They were too complicated. Like not even the Fed chairman understood the products that Wall Street was creating in these derivatives. These CDOs, collateral debt obligation, and CD, all this stuff, and it's all fraud. And back to the fake gold article, where that company paid off the auditors to certify that they had gold when they didn't have gold. It's the same thing with these the regulators with these Wall Street firms, because why would you stamp a package of, to your term, Mr. Wong, dog shit, right? Why would you stamp those AAA when they weren't? Because they were paid off. They were paid off to stamp them AAA because the only way that they could sell them back into the market was if they had AAA on them. But they were not AAA products.
Nope.
They were not, so the regulators were stamping them AAA when they weren't. Why were they doing that? Because they were being paid off.
Yep. When you put a pile of dog shits into a nice little box and you put a little bow on, outside on top of it, it's still a pile of dog shit.
It's almost like you put a good loan at the top, a good loan at the bottom, And in the middle, it's all this dog. So when you hand it to
That's right.
somebody, they see the good one. So okay, this is good. Let's go, right? But if you really dig into it, they would realize that most of those loans in those packages were all defaulted loans or over 90 days type loans. But they didn't care. They packaged them all together.
They did not care.
Made them AAA, shipped them out into the market, and then they blew up. Even Goldman Sachs was very big at doing that too. They were one of the biggest culprit for doing stuff that was Goldman Sachs. Wall Street, man, I'm telling you, like I said, Wall Street coming to the Bitcoin space, they bring the money. I get it. But we have to understand that with Wall Street comes fraud, right? That's how they operate. That's how they make their money. So we have to be prepared for when they start coming to this space. A lot of people have been thinking about that. I mean, people that's in the know. We know how Wall Street operates. So it's like, oh man, we got to deal with these guys. But it is what it is, Mr. Wong. What are you going to do, right? That's why you can be a Bitcoin miner. So you know that the Bitcoin that you mine belongs to you. It wasn't Bitcoin you try to buy from some no-name exchange that you may have a string of numbers, but when you go to turn it over or set it or whatever, they may say, that address is no good. So I'm just saying, be careful, right? Everything is good now. There's nothing going on right now to give anyone an indication that any shenanigans is going on. But based on Wall Street history and the things that they have done and how they operate, we know that once they get in this space, they will try to find a way to start create some derivatives from Bitcoin, and that could be problematic. It may not, but it's just a warning. All right.
Well, that's why I like to keep it simple, guys. And that's another reason why I like the mining versus just buying and holding. Obviously, don't try to go out there and get a loan just so that you can buy a mining package or buy machines from us, right? or don't go out there and get a loan or take out an equity loan and so that you can buy a couple of Bitcoins and hold on to it. That's a bad idea.
Bad idea.
Take the money that that you can afford to lose, even if the value of Bitcoin goes to zero, right? Then you have two choices.
That's how you should think.
You can either go out and buy Bitcoin, or you can go and do, start mining with us. I like the mining part because I don't want to have to, psychologically keep looking at the Bitcoin price on a daily basis, right? And worry about the fluctuation of the price, because that's, if there's one thing that the Wall Street, bankers are good at it, that's one thing that they're really, really good at, is to help manipulate the price, right? They can help pump it up or really pushes it down. And, if you're one of those, guys that, hey, you bought it at $10,000 and it goes down to 7 or 5 or 3,500, like, not too long ago, are you going to sell? Right? Most people will not have that willpower to hold on to it. I'm afraid that most people would sell. But to me, if I'm on the mining side of things, I bought a computer that's a mining machine that is already mining it for me, right? Obviously, I'm not going to sell the mining computer because it's already bought for it. I can't sell it, so I'll just let it run its course and let it mine the Bitcoins and let it accumulate the number of Bitcoins for me over the long run, and not have to worry about those price fluctuations. That's what I like about it.
Absolutely. And then to your point, Mr. Wong, you mentioned that, hey, don't go get a loan just to buy a mining package.
Yeah, please don't.
You can't afford to lose. And that's one of the reasons why I'm glad that we actually have a payment plan. So, I think that was a brilliant move to come up with a payment plan for our clients. So that way, if someone wants to get, one of our higher tier packages, let's say a diamond or a black diamond or a platinum, they can put it on a payment plan, which is a great idea. It's a great deal. So a lot of our clients who want to mine Bitcoin, but they want to mine on a higher end, just do the payment plan. Put 50% down for the package you want, and then do a monthly payment. I mean, that's brilliant. So That way you don't have to put yourself in a bind trying to get involved in the mining game. We'll make it easy for you guys. Like, so easy. You guys don't even understand. So easy. Mr. Wong, time flies, my friend. It's already, and we've been over an hour already. Oh my goodness. Time flies when you're having fun. Guys, this brings us to the end of today's live stream. Always love having you guys here. Appreciate you guys so much, man. You guys have no idea. So, yeah, we're at the end. I'm glad you guys were here to join us. Hope you guys had some value from this live stream today. We're always trying to bring you guys some good content and, information that you can use, not just, to listen to, but actually information that you can actually put inside your consciousness and let it sit there, marinate, to make you a better Bitcoin investor or Bitcoin miner in this space. And just an investor overall, right? So don't forget, guys, tonight, 9 p.m., make sure you join me for our webinar, our compensation webinar at 9 p.m. I don't think I dropped that link yet. I dropped that link right now for the webinar tonight. So hope to see you guys there. Mr. Wong, any last words for the people, sir?
Hey, keep us safe, guys. Together we can defeat this COVID-19. All right, we all have to do our part. So keep it safe, and we'll see you at our next podcast on Friday. Awesome.
How about you, James? Any last word for the people out there, sir?
No, just appreciate you guys keeping us company every Monday and Friday. We're seeing a lot of the same faces and people participating in the chat and liking the stream and just helping us build this little community. Really can't thank everybody enough.
Love it. Love it. All right. Okay, guys, have a wonderful Monday. See you guys tonight. And don't forget tomorrow, 7:30 for our members training and for a guest presentation as well. And then we'll see you guys next Friday, 5:30 for our next live stream, okay? Have a wonderful night, guys. You guys take care. See you guys later.
Good night, everyone.